Hey, welcome everybody. Welcome to the Deal Board podcast. This is our next edition of a live podcast. We've done several of these during the COVID crisis, and they've been working out great. And we've been able to get a lot of great information out there. And Jessica, we have another good lineup today of great speakers and information to give out.
Yeah, we've got another great lineup. And if you didn't watch our first two live podcasts, they're great episodes. They're available at the dealboardpodcast.com. But today really kind of the topic spurred out of the last two podcasts. And I think these PPP loans have brought to light SBA financing in business acquisitions. And a lot of people have reached out to us and said, hey, I didn't even know that SBA had loan programs for businesses and things like that. So we decided to do a podcast focused in SBA, but also the new world of SBA as we're living in 2020. And we've got some great guests joining us today.
Yeah, we do. We have John Wahl from Live Oak Bank and Lynn Singletary from BankUnited. And did I get that right? And so I want to thank both Live Oak and BankUnited for being great partners of TransWorld over the years. We've been working with them on many deals, and there's a lot of programs out there. You know, basically the main one that we work with at TransWorld is the 7A program that helps people buy business acquisitions. And then of course the 504 loan is also an adjunct to that, another program that involves commercial real estate. And those are the two main programs we've been working with over the years. And it's been a really a godsend for business owners to help them sell and monetize their business, and for business buyers to help leverage in and buy a business. We saw during the economic downturn where they raised the cap from $2 million to $5 million. And we've been going along with that for the better part of a decade now. And I think the SBA is going to be even more important moving forward. Now, the PPP, the Paycheck Protection Program, was rolled out. Lots of money went through. The government was nice enough to say, hey, we're not going to handle this. You guys, the banks are. And so John, we saw John a couple of weeks ago and talking to Hakeem, and they were all consumed with trying to get this money out. But now what happens, right? So now here we are. The money may run out. The money, we're certainly going to talk about that. And we're going to also talk about what we think the future is, because the SBA program has historically been a great way to bail out the economy.
Yeah, and I think we are going to see some stuff that's going to happen more moving forward, especially related to the 7A program. We're going to talk a little bit about that today. So really how the format works today, Andy and I have some topics that we're going to talk about with John and Lynn. We've got panelist style. We've got some questions to ask them, but we really want this to be driven by everyone that's on the call today. We know lots of people have tons of questions about SBA and business lending and what does that mean. So if you haven't been on a Zoom call before, in the footer of your Zoom area, you can submit a question using the Q&A button. And Danielle, who's been with us for the last few podcasts, is going to moderate that Q&A. So this is your chance. You have two great experts in business lending. This is your chance to get your questions answered. You can also ask them anonymously. So if you don't want everybody on the call to know who you are, you can ask the question anonymously. And like we always say, no question's a dumb question. So, please feel free to reach out to us and ask some questions. But we do have some questions teed up and topics. And maybe just, Andy, to get started, let's just talk about what SBA lending is. And we can talk mainly focus, John and Lynn, about the 7A program, because that's what we usually use. But just basics, SBA lending 101, what is it?
Why don't we go to John first?
Yeah, John.
So the SBA 7A program is a lending program that's facilitated by banks, and there's different certifications banks can have. Live Oak Bank is a preferred lender in which we're able to make decisions autonomously on behalf of the SBA. But what it is it provides enhanced credit terms for a bank. With business acquisition, there's typically risk of ownership change, cash flow, lack of collateral, those sort of things. So the SBA, the U.S. government, backs currently 75% of the loan if it does go bad and everything, all the T's are crossed, the I's are dotted. things along those lines. It provides a larger credit box to be able to do ownership changes, business acquisitions with longer terms than what would be done conventionally, and also doesn't have the type of collateral requirements that a conventional loan would have.
Yeah, and Lynn, you could kind of take from that. I mean, banks basically wouldn't make these loans unless it was for the guarantee, right?
Right. And so a lot of people think that it's an SBA loan, that the government's making the loan, but in reality, it's the banks that are lending their own money, and the government is giving us, like John said, a credit enhancement. They're giving us a guarantee that if anything goes bad with that loan, the government will step in and they'll make good on 75% of whatever the outstanding balance is, and the lender would absorb the 25%. And then there's other programs, like if the business is an export business, we can obtain a 90% guarantee versus the 75, because that incents lenders to really make loans to companies that are exporting rather than importing into the United States. So that's another incentive. But certainly it's a cash flow kind of loan. So we're not lending based on loan to value. We're not lending based on collateral. We certainly need to take collateral if it's there to secure the loan, but it's a cash flow loan. So we need to look at historical numbers if it's an existing business to make sure that the cash flow is there to service the proposed debt that we're looking at. And if it's a startup, we have to look at projections to make sure that the projections are solid enough to convince us that the business is going to be able to pay back the loan.
Yeah, that's great. That's a great overview. So, and we've seen, a lot of businesses being, certainly during the economic downturn after that, it was tough to get some loans through. And then for the last decade, it's been a very brisk business in the SBA lending world. So, John, and we'll go back to Linda first. What do what's the current state of, what do you see right now? I think people on hold, or you see some of the banks starting to dip their toe back in the water with some of these loans?
Yeah, I mean,
oh, sorry, John.
Linda, go. Lynn, go first.
Okay. Certainly before February, things were going along pretty well. Okay, and then everything happened, as we all know, and things came to a screeching halt. And so really the only loans that the banks have been making in the last month or two have been the PPP loans, and where the banks have kind of stepped back and said, well, let's see kind of what's happening here. Now that we've gotten through the PPP loans, many of the banks, BankUnited included, are coming back and saying, okay, well, we know that there are certain industries that have been hit really hard: hotels, restaurants, bars, all of those have been hit really, really hard, and many of them have closed. So, a lender can't make a loan to a company that's closed. So those will be difficult loans. There are other industries that really have not been affected or have been affected minimally by what's going on. And so each lender is going to be looking at what the industry is, how affected was it. We've been giving some direction from the SBA on what we have to do to document the file, to justify why we are moving forward with a loan under the economic situation that we're in now. But it's not that some lenders are not. Many lenders are looking at it like we are, on a case-by-case basis. How is the economy affecting the business that you're looking at to make a loan?
That's
Yeah,
great.
and go ahead.
No, I was going to say that's great. And John and I talked a little bit about that too, but I think maybe also, John, if you could talk about the PPP, how I think there's a lot of confusion out there of how the PPP affected business lending. And some of it was just a timing perspective, but, based on our conversations in the past, if you could just talk a little bit about how did the PPP affect what's going on with, getting deals done in the business world too? And do you see that getting better right now?
Yeah, I do. I mean, I think when the PPP loans first came out on April 3rd, it was really, we didn't know how long the funds would be around. We didn't know what the demand would be. So it obviously took a lot of the lenders off the front lines and were engaged in making PPP loans. I mean, it was a tremendous impact to small businesses across the country. And I think without the intervention and the PPP loan program, you would have seen a lot more. I think you would have seen unemployment be a lot higher. And so I think now that there has been that initial demand, the surge has came. We've got round two. I mean, I just checked today. There's additional $110 billion still available in the PPP program. The run rate's been about $2 billion. So I was way off in my calculation of my bet with Andy that it would be gone in 96 hours with the second round. So there is still money out there. And when you look at that compared to $28 billion worth of 7A lending in all of 2019, there are funds still available for folks that may need it. There are lenders still participating in it. And so that's the good piece about it. And I think moving forward, I'm sure there's going to be a lot of questions about the forgiveness piece of it. This program has kind of been like building a plane while you're flying it. Not everything comes out right away before takeoff. And even as of today, the rules for the forgiveness have not yet been issued. We believe that the Treasury are going to issue those either tonight or tomorrow. But folks do have 60 days in which to request that forgiveness once those rules come out. So I don't think you're going to see the surge and banks having to be, or at least lenders like myself and Lynn, be engaged in that piece of it, because they do have 60 days. So I think it'll be a lot smoother process on the back end. At least I hope so.
Yeah, I hope so.
And a lot of lenders are recommending that the borrowers contact their attorneys and their CPAs to really get a handle on now what they should be doing in order to meet those guidelines. And I, from what I understand and what I read, the guidelines they're not even set in stone yet. So there are some, when it was first presented to everyone and the lenders, there were certain guidelines, kind of loose guidelines that were thrown out there. Now they're realizing that in practicality, some of these, like restaurants that were not even able to open, but they got the PPP loan 2 or 3 or 4 weeks ago. Well, if they're not able to open, they're not spending the money on payroll, so they wouldn't be able to meet the 8 weeks initial request. So it's my understanding that there's, it's evolving, and none of us really know what the ultimate guideline is going to be until they come out.
Yeah, I saw Marco Rubio on a Titus Center for Franchising call yesterday, and he stayed on with us for 45 minutes talking about mostly PPP and that they are definitely looking at changing the rules, extending the 8 weeks or starting the start date from when the business opens for business again. So they're looking to be flexible on that. I think, and I saw some guidance, John and Lynn, that, anything under 2 million, they were basically not going to approach, they were not going to audit those loans, probably just because they're too busy. But
Sure. Well, I mean, they're not going to audit them, but they're still going to have to meet certain guidelines that in order to get the forgiveness through lenders. But I mean, it would be devastating for some of these borrowers to not be able to get the forgiveness and then have to pay back this loan in 24 months. If you had a $150,000, $200,000, $300,000 loan, the payback would be pretty substantial if you had to do it within 24 months. So they're going to have to do something that is helping these people not get
especially when you had folks rehire people where there was not revenue coming in the front door. Right. I mean, that's where I think it is tough for some of these bars or hotels or restaurants where, they did the right thing. And, one thing I will say about the SBA program is if it's in the spirit of the program, generally they will look to find a way to make things right with making adjustments. And obviously Rubio has been a huge proponent and very voiceful in, bringing about the necessary changes.
Yeah, he's on the small business
Yeah.
banking committee. So,
And he's been a real advocate for the higher guarantee and the waiver of the SBA guarantee fees too. I don't know where that's going, but he really is an advocate for the SBA program.
well, you took the words out of my mouth because that's one of the questions that we had for you. There are some opportunities out there now to get a loan. And so, Lynn, why don't you just finish that thought with the waiver of the SBA guarantee fees right now?
Well, it's not in place right now. Now, I mean, the PPP loans, you had the waiver, but right now, what is in place for the existing borrowers is a 6-month, basically not forgiveness, because the government is basically coming in and paying the first 6 months starting April 1st for the existing borrowers. So it'll run through September. Their next payment would be October. And basically the government through the CARES Act is picking up their principal and interest payments. And then any borrower that closes from now through the end of September, new borrower, their first 6 months of P&I payments would be absorbed by the government, which is, I think, huge. I think that was even better than the PPP loans in my view, for the existing borrowers to really help them through this time frame.
Yeah,
We had a deal. Go ahead.
No, I was gonna say we've gotten great feedback. I think it's one of the things that got hidden in the CARES Act that really people weren't aware of, and we talked about it on our last podcast, and we're trying to bring light to it. But more and more people are starting to talk about that. I agree with you, Lynn. I don't know what we call it. You know, the SBA paying your loan basically for 6 months, not forgiveness, not like whatever we want to call it. But you know, kicking it to you, John. We've got a couple questions in the Q&A, and there's some concerns about there's going to be like a mad rush to close on these 7A loans to get this 6 months. Like, do you see their potential to be a backlog or delays in closing? Or, you know, one of the questions is like, could the money go away? Like, is there a cap on how many loans can be issued and the 6 months deferment be received?
Yeah, so a lot of good things. Right now, the 7A loan the authorization amount got rolled in with the PPP loan under the CARES Act. So right now there's $110 billion in that pool. There's obviously some legislation that's has been drafted out there to reauthorize just the SBA 7A loan program. So yes, there is a risk of dollars not being available, but I think that risk is pretty minimal and pretty short term in nature, with the fact of the slow run rate on the PPP dollars and there being money available today. And then also with these new legislations authorizing more money for that, I think that I think there will be a little bit of a rush to try and close deals prior to that September 27th. I mean, who wouldn't want to get 6 months of P&I paid? I think that's really beneficial for a lot of these small businesses. I think some of the proposed changes that are in the legislation that is out there are also great, from the possibility of providing an increased guarantee to the bank to help kind of limit the risk and stimulate more lending, to possibly increasing the project size to $10 million for 7A loans, and then also possibly waiving the SBA guarantee fee. So there's benefits on the table right now, and I think there's even more benefits with this next stimulus package.
Yeah, we have one deal. I was just about to say that closed specifically because of the 6 month P&I. But the buyer was totally not going to go forward with the deal and said, you know what, I'm getting 6 months. I'm going to have enough working capital. And I've said this before, that sometimes after the closing, the buyer's in a better cash flow position than the seller was, because now they have, working capital included as well. So, and then, somebody, what happened last time, one of the things was we saw the down payments kind of creep up where they want, 25%, 20%, an increased seller note, maybe, even up to 40%. Do you see that happening yet? Or do you think that's going to happen moving forward? And I'll go with Lynn first.
I think it's going to be on a case-by-case basis, depending on the industry that we're looking at. And, the the cash flow. I mean, the cycle of the cash flow. So I really believe it's going to be just a, an industry by industry decision by the credit folks.
And I would add to that, I think it depends on how soon someone's looking to do a deal. We're a lot of states are still in the middle of this right now. Some states are opening up, returning a little bit more to normal life. So I think it depends on where in the country you are, the specifics of the deal. I think that if you're looking to do something in the short term, I think banks will hedge some of their risk with looking to have the seller participate and take on some of the unknown factor in the transaction. I think those will help get deals done. And the SBA does require, a minimum equity injection. So, that sits at 10%. There's some flexibility in the details on that. But, I think per industry, I would anticipate and tell buyers to be prepared with at least the 10%, and that makes sure that that's in cash and available, and that the seller carry is going to be more likely until we have a longer track record of how businesses are performing coming out of this.
Yeah, that's actually, John, that dovetails into a bunch of questions we're getting. It's just maybe real high level, John and Lynn, we can cover some of the basics of what does a typical SBA 7A loan look like? So, we talked about down payment, minimum 10%, but we see, 20% typically, whether that 10% comes from the seller or the buyer. But talk a little bit about down payment. There's a question about what percentage of the business do they have to buy. So that's a tee up for you guys. And also what are the terms that we see? So what are, rates looking like? How long are the loans? What's the amortization schedule look like? So maybe I'll start with John and you can answer half of those.
Yeah.
Just
real quick cookie cutter. I mean, SBA sets a lot of the parameters for what these are. An acquisition loan is going to be on a 10-year, up to 10-year term and amortization. They're always fully amortized. There's no balloons associated with SBA loans. One thing that you hit on, a question about how much of the business needs to be bought. Under the SBA program, it's 100% of the business has to be bought. When you use an SBA loan, Live Oak does offer some conventional products that if you're looking to do some sort of partial buyout with an equity roll or something along those lines. But I'll let kind of Lynn finish out some of the other components about down payment and rate.
Right. So as John said, the SBA, I think last year or the year before came back and said, okay, prior to that, they actually would let every lender make up their own criteria on business acquisitions as to how much cash injection that was required. They came back and they said, okay, we're going to make it across the board, absolute minimum 10%. So business acquisition, a borrower needs to put in 10% of the total project, which is the purchase price and working capital and closing costs. Now, a portion of that can come from seller carry, but then that has to be on full standby. So typical sellers are not going to go for that. Anything over 10%, so let's say a lender, you got a large deal. Some lenders, if you've got a $2 million, $2 million, $3 million airball or goodwill deal, they'll want the buyer to put in a little bit more than 10%. They may require 15 or 20%. So in that case, anything over 10%, you can start looking to the seller for some seller carry. That would make it a little bit easier for the lender to approve that large unsecured debt. And then some of that seller carry it ranges. Some lenders will require it to be on a full standby for 2 years and then amortize out. Some lenders let it amortize day one. So I think it just all depends on the strength of the cash flow and ability of the cash flow to service both debts, the lender's debt and the seller's debt. So those are all different. I mean, those are negotiating factors that you have with the lender when they're looking at the deal. And then if the deal has real estate in it, so if it's a real estate acquisition along with the business, and the real estate is a larger portion of the business of the purchase price, then you can amortize it over 25 years versus 10. So lenders like to have real estate in the deal. There's more collateral, and then also your borrower gets a longer amortization.
And I see one of the questions was, can the seller retain equity? And the answer is no, right?
No.
Under the SBA program, correct. They cannot.
Correct.
And the other thing they need to know is the seller can stay as a consultant in the business for up to 12 months. So they cannot stay on longer than 12 months as an employee or a consultant.
Just kind of a reminder for everybody, we've got a lot of great questions going on in the Q&A. Actually, at this point, Andy and I are probably abandoning our script.
Yeah.
So if you have questions, that's where we're pulling the questions from now. And even if it's very specific, where me, Danielle, and Andy are kind of wrapping them together and getting these questions answered for you. So keep going on that side. We've got a lot of questions. Lynn, and I'll kick this one to you first. We started talking about PPP. We moved to 7A. Let's talk about if a business took a PPP loan, and this is a common question we're getting now, how does that affect the buyer of the business? Like, does it have to be paid off before closing, or have you guys gotten any direction of how PPP loans will be handled in the transfer of a business?
Well, I would think that if a seller obtained a PPP loan and then they sell the business, that's basically, that would create, I would think, or cause them to have to pay that loan off, because they're, the business that received the loan is no longer has the cash flow to service that debt, right? Because they're selling the debt, they're selling the business, and the borrower would be the seller. So I would think that seller would have to pay that loan back. Now, the PPP loans, there's no collateral. There's no personal guarantee. The loan is made to the business, but I would still imagine that loan has to be paid back. I don't believe that it would be a loan that could be assumed by the person buying that business.
Yeah, that's what we've heard. And John, John and I were trading some stories the other day that some of these banks rushed out so fast that they didn't even get paperwork signed, right?
Yeah, I've heard of some stories of people just ending up, looking at their business banking account one day and there's money in there, while they're working on a deal with another bank. So, I mean, it was a little bit like the Wild West. And, I think it's so new with business acquisitions and the PPP being part of it that it's going to have to be negotiated between parties, because you obviously want to keep those people employed and use those proceeds if they're not used up. But then you also need, a partnership to make sure that you can get the right information to show that they're forgiven. So that no guidance has came out about that. And for folks that have a lot of questions around the PPP, the U.S. Treasury website has a FAQ out there that goes through a lot of different scenarios, which is a great resource for those. It also has, the borrower guidelines. And so I would refer a lot of folks to that website for PPP questions, because it is very helpful. And there's a lot of different scenarios that they go through.
So I did see a question, and I think I heard Marco Rubio answer it correctly yesterday, was whether or not the PPP monies would be taxable. And I heard him say that he was going to work very hard to change that to no. But as of right now, they are revenue, right?
That's what I've heard.
Yeah, I've heard a couple different things that, that if you're not, you may not be able to claim the expense if you're not claiming the income on it. So I think, again, that, at least for tax return purposes, there's a fair amount of time, because I think that'll be something important. Typically any, debt that's forgiven is taxable. So I think that was never the intent of the program. So hopefully that is something that gets figured out. So I have seen a couple of these questions about, what does a deal in today's world look like? And I think one of the important things that if you're on the selling side of a transaction right now is to have really clean financials, really clean and really current. And when I mean current, typically we would have looked for financials within the last 60 days. Now I would say we're looking for financials within the last 5 to 10 days and looking to see what that comparison year to date 2020 through May 14th looks like year over year. And then there's also going to be questions around the impact of COVID that each business owner is going to have to, respond to, not just from the banks, but from the business valuation folks or folks that might be involved doing due diligence as part of because, as Lynn mentioned earlier, some businesses have been, very adversely affected by this. Others have seen, the complete opposite and have prospered through these times. So having clean books, current books with good comparisons will help facilitate the transaction.
And so just to kind of one more about PPP. And some people, a couple of questions are, I never got my PPP loan, or I applied for it and it's still pending, or are you only dealing with your customers? Now, I'll let Lynn start that question.
Well, with BankUnited, yes, we were only issuing PPP loans to bank customers, whether they were borrowers or depository customers. And I think most banks were doing that. Now there are some non-bank lenders that were out there making loans to just the general public. But I think majority of the banks were making them to their customers. And they're still available. They're still available out there. There are still lenders that are making the PPP loans because there's still money left, but it slowed down a lot.
Yeah, for folks that are still looking for PPP dollars, they are still out there. I mean, there's 110 billion left. If you're a sole proprietor or 1099, there are some fintech companies online that made the process very easy. Live Oak is still accepting applications for PPP for non-customers. So there is still money available, and definitely would take advantage of that. I mean, we've had the ability to, impact over 215,000 jobs across the country with the PPP loans. So, the next step will obviously be forgiveness on that, but it has made an immense difference.
Yeah. Thanks, guys. Yeah, and I know there are even some of the banks that we've seen struggled, like in Colorado, we saw Wells Fargo had their issues, and they're still working through the applications. I heard some people that are getting funding like as soon as today, so that's still working through. If there's people on the call, you're still in line. It's just taking everybody some time. Like John, I think you mentioned there was, what was it, 68 billion that went through the SBA financing last year, and we just did, I don't know, I'm doing the math, about 500 billion, right? In a couple months.
There was 28 billion done in the full year. And, if you look at this over the last 6 weeks, we've done 400 plus billion. So, I mean, it's pretty amazing when you think about it.
Yeah, I've been telling everybody, buy your banker a bottle of wine. Like they've had a rough couple months.
A case of wine.
Or a case of wine, yeah.
It was a monumental task that the banks went through to get this done.
Exactly. Well, let's bring it back. We've got some clarifications on SBA financing. I know interest rates, and you guys can talk about this a little bit more. Interest rates, just talk a little bit about how they're determined. Are they determined as a basis of prime? Are they fixed? Are they, floating rates? And Lynn, maybe we'll start with you. And I know it depends on the deal, depends on the bank, but if you could just give the listeners an idea of like, how are interest rates determined on these types of loans for business acquisitions?
On the 7A loan, they're typically priced off of prime. And it can go anywhere from prime rate to prime plus 2 3/4. So 2 3/4 is the maximum that SBA allows lenders to charge on the 7A loans. Again, like you said, it's a bank by bank situation. Some banks are offering fixed, not a lot on the 7As that are the shorter term, the 10 years, but there's rates out there, and they range again from prime to prime plus 2 3/4. And I think each lender looks at the risk, looks at the type of loan, looks at the industry, and then determines, looks at the security, the cash flow, and then determines the pricing that best fits that loan.
John, I don't know if you have anything to add to that or anything that on the Live Oak side.
No, I mean, what I would say is it's risk-based pricing right now. When you think of prime plus 2.75, you're at 6%. That is unbelievably cheap money. When you're looking at the risk that the bank's taking for financing goodwill or an airball. And there was a question about this, which is defined as really just the intangible aspect of a business. But, you know, money's really cheap right now at 6%. Considering, you know, if you're going to have to dilute your company with bringing in other shareholders or, you know, mezzanine debt or, you know, credit card debt. I mean, that stuff is all upper single, lower double digit type. So it's a great time.
Yeah. Yeah, really great time. Yeah, great time to use money. Actually, John, while we're on you, the next question I think is a good one for you to answer specifically with the types of deals that Live Oak does. But there's a question about, you know, what if I want to buy a business above the $5 million 7A cap? You know, how can somebody use a banker and lending partner to structure a deal like that one?
Yeah, so Live Oak provides some combination financing, which is where you maximize the SBA 7A loan program at the $5 million. And then you look to provide a conventional loan that is done through the bank in a second or shared lien position. And those can be, you know, up to, I will say pre-COVID, you know, we were looking at those up to an additional $3.5 million. So you could in turn get $8.5 million in financing through one institution. Obviously, the ability and possibility of the SBA going from 5 million to 10 million could be really beneficial for some of those larger size companies. So yeah, there is a way to do it. And that's one thing that Live Oak has been very successful and done quite a few of those deals over the years.
Yeah. So why don't, I mean, this isn't a question, but I think it'd be helpful. There was some questions about like, you know, I'm looking to finance a restaurant or an e-commerce business and stuff like that. And it's different for every lender. Lynn, you talked about this. John, you talked about it. But why don't you guys just like really briefly so people understand what Live Oak and BankUnited are looking at in terms of deals. You know, what are deals that are really in your wheelhouse? And then what are things that can't get done right now with your bank? And for everybody on the call, just remember, again, there's SBA guidelines, but you're borrowing money from a lender and from a bank. So these are going to vary bank by bank, but I know there's been a lot of specific, especially industry driven questions. So if you guys could touch on that. And Lynn, maybe we'll start with you.
Sure. So a lot of times the bank has a certain mix of industries that they want in their portfolio. So like, let's say hotels, for instance. So if your bank is hitting up against the percentage in their portfolio of hotels, if they're like, okay, we've hit that point, we got to back off. We can't do any more hotels. So, you know, they'll come in and they'll say, well, we're not going to do hotels for a while until that portfolio pays off, and then they'll start adding more. So with BankUnited, we weren't doing hotels. We are doing hotels, but now with the COVID, it's a little bit more difficult until they all open up. So we'll see what happens. But with BankUnited, we don't have an appetite for cross-country hauling businesses. Really, there are minimal businesses that will say we just won't do. We will look at certain industries a little bit more critically than others. We'll have to look at the experience of the buyer. Some industries we want to have specific direct industry experience. Some industries will be okay with, relative experience or relative experience. So it all just depends on the industry. We don't really like to say we're just not lending to that industry. It really go back to the case by case basis. It's a matter of the strength of that business they're buying. You know, where it is, what's the location, who the buyer is, what their experience, what their financial capability is really what we look at.
Yeah, and I would say for Live Oak Bank, we are relatively industry agnostic. We do have 26 different industry verticals where we have experts, domain experts that either came out of that field and may not be lenders, where we have some additional knowledge and understanding of that. Outside of that, we would look at the majority of industries. There's probably some that are more challenging for us when it comes to restaurants, non-branded, hospitality. I would say businesses that have a focus around single family home construction are challenges for us. In addition to, e-commerce is kind of an unknown industry where we would look more towards someone that has really deep experience along with the company's been around for a while, but outside of that, we're industry agnostic. So there's probably 5 or 6 company or business types that we don't participate very well in.
I see some of the questions are looking at what kind of businesses can you buy? Like, there's going to be bargains out there, right? So there's a few things going on. Number one, there's bargains because there's uncertainty in the market, and certainly incomes are going to drop over these 3 months to who knows how long the hangover will be once we kind of come back from this. And so we base valuations on that. So I'm sure you're going to as well. And the other thing is there's going to be some bankruptcies and things. Are there opportunities for people to buy things even out of bankruptcy?
So I would say that, turnaround businesses have always been a little bit challenging. Where I think there could be some opportunity is if it's an existing business in that field. Maybe it's a competitor, or maybe it was, someone that wants to go vertical or horizontal in that industry, and they have an existing company where we can look at that cash flow and that history as opposed to the bargain that they are buying. But I would say that if you were just a private individual looking to buy a business at what you thought was a discount because of non-performance, I think that's going to be challenging. I think those are deals where you're going to need to raise equity, seller carry. Andy, you and I and Jessica have all talked about this. Those may be, you bring in some more equity than you necessarily would with an SBA loan, and then you look to the seller to carry that, or a combination of those.
Yeah. And I will, I'll jump in here too. I know there's lots and lots of questions. If you're looking to buy a business, we don't, you're not expected to be an expert in how to finance the transaction. That's where you really want to lean on your advisors, especially your business brokers in the deal. Like, I know in our office, we have a whole sheet of all the financing partners we're working with, and like what industries they prefer to do if they're not doing certain industries, if they have a minimum loan size, if they have a maximum loan size, if there's deals they won't do. And then we can talk about earnout structures and seller financing and all that stuff. So I know there's been some questions too. It's like, I went to one bank and they said no, just because one big myth I think we get with SBA lending too is like, if you get denied for you don't get denied for an SBA loan, you'll get denied from a bank, right? So if one bank says no, that doesn't necessarily mean that the deal's not going to work for another bank. So Andy, I know we've got a bunch of questions still, and we got about 15 minutes till the top of the hour, which would be one of our longer podcasts. What do you think about doing just like a quick fire round? Just go down the questions and get them to answer it. You're muted.
Man, the power went out here. It was kind of crazy. So right in the middle of my podcast. So real quick, you both loan 50 states, correct?
Correct.
Okay. Awesome. And you guys are both doing 7A loans. And then if anyone's looking at 504 loans with real estate as well, right?
Correct.
All right. We're going to drop their contact information into the show notes too. I'm going to now just fire, me and Andy are going to take turns firing some of these questions of the Q&A. John, I'll start with you. So you'll get your questions from me. Lynn, you're going to get your questions from Andy. Okay.
All right.
So, John, post-COVID, how many years of month cash are SBA lenders going to want to see? And how will they make adjustments for dips in cash flow during COVID?
I think from a working capital standpoint, if we could look at 3 months minimum for post-closing, each business is going to be a little bit different on that. And then for looking at the financials during COVID, that gets into detail and understanding the business, how they're going to recover, how quickly they can recover, what capacity they're going to recover at, what influences the state laws stay in place, all that has.
All right, Lynn, what's the minimum credit score needed approximately?
Again, every lender looks at it differently. You know, we're about a 680. I can tell you that. So usually that's around what most lenders are looking for. And then there's also some explanations sometimes that, you know, we can
Sure.
look at.
John, what's the minimum loan duration for an SBA loan? Could you do a 2 or 5 year loan instead of doing a 10-year term?
You could, and that's came up recently with 6 months being paid by the government. I think the biggest question is it boils down to cash flow. Could the business afford to amortize that debt that quickly? But there is no minimum amount of time that you could do a loan. So,
Lynn, what about seller earnouts? Are they allowed? You know, can you wrap them into the equity?
Yeah, no, you can. Seller earn out, seller carries. Look at them very much similar.
Okay.
John, two-part question. So I'm going to give you the first half now, then we'll kick it to Lynn and come back. How long is it taking to close a transaction with SBA funding right now?
you know, if you're working with a PLP lender, you know, like Live Oak or BankUnited, I mean, typically 45 to 60 days is what you would expect under that. You know, that's normal, 45 days.
Go ahead. And are there prepayment penalties these days?
Any loan that's amortized under 15 years, there are no prepayment penalties. Above 15 years is the standard 5, 3, and 1, first 3 years. On a 7A, the 504 is a longer prepayment penalty.
And I think that answers another question about getting penalized if you sell your business before your expiration of your SBA loan. John, so the second part of that question was, what are the fees that they're going to pay associated with SBA loans?
So the SBA guarantee fee is a sliding scale. It ranges between 2.15 to 2.75% of the loan amount. And that is what funds the SBA program. So that goes directly to the SBA. That's not a bank fee. In addition to that, there's third-party fees, business valuation, UCC searches, recordings, attorney's fees, those sort of things that I would typically just, if you're looking for a rough number, would estimate, you know, around 10,000 of third-party cost fees.
And Lynn, are you working with the SBA Express, and can you combine that with a 7A loan?
You can, yes, and that's what we like to do. So if there's a line of credit that's needed, we usually roll in an Express loan.
And just real quick, what's the Express loan parameters?
Maximum 350. They haven't changed that since last time I looked.
Probably not.
And it will revolve for the first 24 months, and then it will, whatever is outstanding at that time, it will amortize over the next 5 years. And I believe we can actually make it go a total of 10 years if it's warranted.
And there is a temporary increase to that through December, up to $1 million on the Express.
On the CARES, through the CARES Act.
Wow.
Here's one. We have a buyer that is looking for a 7A term loan that contains a lot of goodwill. So it's mainly a cash flow lending deal that covers debt. The question is, will the lenders let us use the market valuation appraisal that like they would get from their business broker as opposed to a third party, since there's not a lot of fixed assets? So John, maybe talk a little bit about the appraisal process.
Yeah, so the SBA requires that a third-party certified individual or company perform a business valuation, and it is separate. They actually don't take into account the tangible assets of the business. They're looking at the intangible values, either using a historical cap rate, or, you know, what some business valuation folks have talked about now is using a discounted future cash flow. There was just recently a webinar that Darren Mize from GCF completed that I thought was very educational. because I think that is a moving target. He kind of said that, there's kind of three different buckets of how the businesses will be valued, but it's typically some multiple of cash flow. But with the impact of COVID being unknown and what the future is, I think they will also look at historical and projected and the assumptions that go along with that.
Yeah, maybe one or two more.
Yeah, I think we got time for like one or two more. So you pick your best question.
I got Lynn. Can you refinance an SBA loan with an SBA loan?
You can. There are certain criteria that you have to meet, but you are able to do that.
Yeah,
Not that easy, but you can do it.
Yeah, I would imagine that some people might be looking to do that these days to extend the term. So,
and then we'll wrap up. John, I'll give you a simple question that was a clarification from something you said before. But can you talk about what a preferred SBA lender is? How do they get that preferred debt designation? What are the benefits to working with a preferred lender?
Yeah, so to go back to that, it's a PLP status, which allows the bank to make decisions without having to send the file to the SBA, which is a lengthy and time-consuming process of 30 to 60 days. So the way that lenders obtain that is by having completed a certain amount of SBA loans, understanding the underwriting guidelines, the SOP, which is a standard operating procedure, and applying to be that. So, most lenders that are in the SBA world are, but occasionally there's some community banks that aren't experts in this. And you definitely do want to work with somebody that specializes in SBA lending. You don't want to be a guinea pig for somebody that does one or two a year.
That's so true. So I want to give both of our guests the chance to give their contact information out. Lynn, I'll start with you.
Sure. It's Lynn Singletary, and I'm with BankUnited. My phone number is 407-731-9555, and email is lsingletary@bankunited.com.
Great. John?
And John Wahl with Live Oak Bank. You can reach me by phone at 303-551-4453 or email me at john.wahl, john.wall@liveoak.bank.
Awesome. And we'll drop those down into the show notes too. If you haven't joined us for our podcast before, the new live podcast format is a COVID special, although we plan on continuing it. But they're released every Wednesday on your iTunes app or Spotify, whatever you want to listen to it. Or you can also visit our website at thedealboardpodcast.com. You can see all of our podcasts there. I think, Andy, we're approaching 100, aren't we?
We're getting close to 100, and we're getting great feedback, especially during this COVID crisis. People seem to have some extra time to listen to podcasts, and so we're getting a lot of good feedback, and we really appreciate it. And so, if you could drop a nice referral on iTunes and
review. Yeah.
Review. Thank you.
Yeah. Leave us a 5-star review on iTunes. That would be awesome.
That'd be awesome. And I'll tell you, I think what everybody can learn from today is that there's plenty of lending to be done out there. There's plenty of money left in the 7A program, certainly for at least a month or three. There's plenty of opportunity, as you heard last time that we got together and talked about buying opportunities. So, give us a call. People are ready to buy too. I tell you, I'm getting a ton of buyer calls already.
Yeah. There's a lot of opportunity in the market, and whether you use financing through a bank or not, there's multiple areas of opportunity. So if you're looking at things like we talked about, bankruptcies or businesses that are closed, there's a lot of restaurants that aren't reopening. There's tons of opportunities in the marketplace, and we're here to be your expert in the industry and really help you get the transaction closed. So we'll wrap it up here. If you have any other questions, I know we didn't get to them all, but you can reach Andy and I at thedealboardpodcast.com. That's our website. We got a couple more questions about that. And John and Lynn already gave their contact information. Their contact information will be on the show notes that are also on that website. So if you have any other questions for us, reach out. If you have ideas for future podcasts, let us know. Or if you'd like to join us as a guest, we'd love to have you.
Thanks to our moderator, Danielle. Thanks to John and Lynn again for coming aboard. Thanks to Hakeem, who's out there listening, for getting Lynn to join us today. And Jessica, we'll do this again.
Yeah. Have a good weekend, everybody.
Thanks, Andy. Thanks, Jessica.